What's up, guys? So, do you think bear are in denials? I think so, guys. Okay, so let's start with Bitcoin. Okay, so Bitcoin basically on the daily, okay, this is the range, by the way, this is the real standard deviation range on the daily time frame, which is extremely important to look at, and this is why I remain cautiously bullish short to medium term. Yes, I'm a bear bigger picture, but honestly, bears are in complete denial right now. They already talk about shorting the market, and I think with the patterns, the momentum, I think we're gonna continue going up, guys. We're gonna continue grinding slowly to the upside. And when I see something like Bitcoin in, you know, such a beautiful, setup, this is a beautiful bullish setup. Even if we pull back a little bit, right? I don't think it's gonna affect it necessarily. I'm searching for the okay, that's the brush right here. We could go here, but then I would be very careful, guys. We could be, creating a W right now, like a beautiful harmonic. Okay, so I would be very cautious. Yes, we could pull back a little bit, but and create like a W, but a lot of people right now, a lot of bears are calling for a crash right now. They're just like, oh, we're gonna crash, and then we're gonna you know we're gonna break the lows here. It's not happening, guys. Okay, look at the demand supply. Okay, this system works very very well until the trend of my LRCs, which are calibrated on 100 period and 200 period, switch to a downside. Yeah, we're not ready yet, guys. Okay, so basically, right now we're in an uptrend. Okay, right now, you want to see the LRC basically go sideways, and then it's gonna switch bullish. But until this happens, guys, I need to stay bullish. Okay, the range for Bitcoin is between about 34 and 25, in that ballpark. Yep, that's the range for Bitcoin. I would be very careful being a bear right now. I think we're going to continue squeezing. This is purely based on on technicals. I'm half awake, guys. I've had a long day, so. But anyways, okay. So now, How could you play this, right? So I'm not gonna play Bitcoin right now. I'm not interested, right? But what I'm gonna do, right, because I am bullish right now, I'm gonna go and we're gonna have fun with coin. Okay, guys. So I am bullish on coin, guys. If you look at coin, guys, right now, this is a beautiful reverse head and shoulder. There's the simulation here going on. And yeah, we could go here on the second standard deviation, right? Which is about, I think, 45, 46 for coin, this is possible, 45. But that's going to be a buying opportunity, guys, and we're going to go right back up. And we have room, guys, to 84, 85. Okay, so this is a big possibility, and this is looking like a really good setup on the long side, short to medium term. But I also believe that it's a good entry if you want to start building your long-term position for the next crypto bull run, guys. Okay, for the next crypto bull run, the number one. I don't know why my computer is bugging. Anyways, the number one. What the hell was I talking about? I don't remember. Yeah, the number one stock you want to have in your portfolio is Coinbase, guys. I'm telling you, this thing is gonna rip. Okay, and I'm gonna tell you exactly where I think it's gonna go. This is not a short to medium term call, though. So if you're buying right now, obviously this is not advice. This is just what I'm thinking, what I'm gonna do. I'm definitely gonna be buying Coinbase on the long run. As a long-term position in my portfolios for the next crypto bull run. That's a must. Okay, and I'm gonna show you guys why in a minute. First and foremost, right here on FinViz, okay, guys. Coin has a 21% short float, guys. Okay, so that's nice. Okay, above 20, that's nice. Okay, that's something that's gonna add some juice to the upside. Okay, and like I told you, we have room to. The ranges are pretty big. Okay. So the range is between 45 and 84, 85, basically in that ballpark. Okay, that's kind of the range for coin. So that's a very explosive range for a stock. So basically, my bigger picture PT for Coinbase, okay, it's very simple. Okay, I'm gonna draw some fibs. Okay, I love fibs. Fibs with standard deviation and the probability of distribution is the way to go, guys, in my humble opinion. My accuracy went from 70 to close to 90% just because of these and properly using these. So I'm just gonna close the see right here so we can just, you know, like this. Okay, so basically, okay, what I'm looking at, guys, is, well, I'm gonna go back on the daily. Okay, so I'm looking at this gap right here, guys. Okay, I'm gonna put a cube. I think this is my PT for the next crypto bull run. Okay, this gap right here. You see this gap right here? We have a gap to fill right here. Okay, that's 220, guys. That's my PT for like 2024, basically. This is not for this year whatsoever. For this year, I just told you the range. I think it's between 84 and 45. Obviously, then you go look at the option chain, right? So we can go look at the option chain. I like to use option AI. So what is the range for? I want to see for the entire year. I want to see the expected move in the option chain. Interesting. So the option chain is not out. Yeah, exactly. There you go. 83, like basically my system. A little bit lower though. 30. Okay, between 30 and 83. This is why I think that at these levels, I think it's a good place to nibble a little bit if you're planning on building a long-term position like me. I think coin is going to be a ripper in the next crypto market. Like, think about it. It's pretty obvious. And yeah, my PT is 220. We'll fill this gap here. And then, obviously it's, between the 50% retracement and the gap right here. Okay, guys. And so that's between, 200, 199 and 220 on Coinbase. That's my PT for 2024 for the next crypto bull run, right? All right. So the next pick that I have that I'm looking at is Tesla. I already bought my position in Tesla. I bought here in the lows, and I'm going to show again. I'm just going to show my system, which is pretty simple. It's just my probability system using probability of distribution, and I bought right here, right? And obviously I'm using other things, but I'm keeping it simple here. This is so you guys can see the probabilities. This is how I like to screen stocks, okay, on the daily. Okay, this is super strong. I'm telling you, the accuracy of this is off the chart. It's insane how good I've become just using this. And right now we're back to the reversal to the means, which was my PT, the green line. And my point with Tesla basically is that if you miss Tesla, what I'm going to do, instead of adding to Tesla, except if we do have a pullback, I hope we have a pullback and so I can add more. But instead, what I'm going to do is I'm going to buy XLY, guys, okay? The consumer discretionary ETF, okay? Because as you can see, right, we got a contraction pattern going on here, right? Obviously, got a nice ascending triangle, right? So that's extremely bullish right here. This is a very bullish setup. Obviously, you can see the accumulation as well, right? It was sideways for a while. And if you compare it to Tesla, right, it's a better risk reward buy, in my humble opinion, with less risk and less volatility, right? And the reason why I picked XLY is because Tesla and Amazon, and I'm also bullish on Amazon. I also bought Amazon at 184. Let's go put some Amazon. Yeah, I bought Amazon about here. Yeah. And I wanted to add here. No, I wanted to add here, but I did not, and I should have, listening to my system on the second standard deviation, and then we went right back up, right? So these are the places where you want to be buying, okay? Okay, so basically going back to XLY, okay, I think this is the best risk reward ETF right now if you want to be trading. You know, I would not be touching QQQs. I would not be touching XLK or these other growth ETFs that are perform very well during a bull market. If you've missed on this rally, by the way, guys, I highly suggest, this is just what I'm gonna do. You do what you want, but XLY is the best risk reward in my humble opinion. And so now I'm gonna go on stock chart, show you the seasonality probability. So here, this is Tesla, right? This is a super cool tool on stock chart. It's free. I love using this. And you just put the ticker and you can see the, it's basically a quantitative data analysis that they do for you. Just looking at the past data for the past 5 years. You can, you know, play with it, put 8, 7. I like to leave it at 4 or 5. And my point is, if you look, and this is the reason why I bought, by the way, Tesla a month ago during the dip, is because I know that Tesla is extremely strong seasonally during June and July, okay? And so in June, right, 75% of the time it goes up 11.9%, and in July, 100% of the time Tesla goes up 18%, guys, 100%, okay? And so my point is, well, how do you play this, right? Well, right now, if you don't want to chase, the best risk reward, in my humble opinion, is XLY, because Tesla and Amazon are the two biggest weighted stocks in that ETF. So that's why I'm going with XLY as my pick, which I might be buying, honestly, or I might do a butterfly, I don't know, or maybe just, you know, sell a bullish put credit spread. So right here, I'm gonna put the seasonality of XLY, and you can see in July, 100% of the time, this thing goes up 7%, guys. That's a lot. In 1 month, this ETF goes up 7%. That's a lot for an ETF, guys. And in June, 75% of the time, it's not as impressive as Tesla, but I do like these probabilities. And that's how you want to be trading. You want to be trading looking at the probabilities. All right, so Amazon is less, I'm not really impressed by the probabilities of June and July, you see. So you can see the contrast between something that has a, you know, a high probability and a lower probability, right? So that's pretty much it for this one. The only thing I do not like about Tesla is it has a very small short flow, which I don't like. I like having a high short flow, right? This is terrible, 3.6%. When you have like a 10, 20%, it's nice because it helps build the momentum to the upside. You know, it's like a slow grind up of shorts getting squeezed. It's very nice. It adds more momentum to the upside in your favor when you're long, right? And 3.6% is terrible. Okay. So, all right. So the last section I want to talk about is long-term buys, guys. Long-term buys that I'm looking at. And please let me know down in the comments, what are you looking at? Because, you know, I'm doing this to share, to get better, so I can log myself as well and just share what I'm looking at. And, you know, those are my picks, but I'd be very curious to know what you guys are looking at, you know, as a survey, like where we can share. I think that's a pretty cool thing to do. All right, so my long-term investment right now that I am looking at is Disney, guys. Okay, yes, they went woke and now they're broke. Okay, we get it, you know. And I'm gonna talk about another one that did that, and right now I called it a couple of months ago. I said it's gonna go down. No, it's not Budweiser. It's another one. I'm gonna say it at the end. That's the honorable mention of the past 3 months. Okay. But anyways, I'm looking at Disney, and look, I like the fact that they're going woke and they're going broke. Why? Because if you're a long-term investor, it gives you a hell of a buying opportunity. Look at Disney. You can buy the stock, right, at the same level. Okay, I'm going to put the monthly time frame, right? So you can see this is how I buy long-term, guys. I put the monthly and I look at the probabilities of distribution, which were at the third standard deviation of the cone of distribution, and, you know, we're at the second standard deviation on my two LRCs, showing me the standard deviation for the month, right? And it's good for the tops and the bottoms. It's really good for just, you know, getting out a bigger picture, right? You know, a lot of people, they don't know when to sell. Well, I do, right? So, and when to get in, and this is a buying opportunity, guys. So now I'm just gonna draw some fibs, guys, from the COVID low right here to the highs. And yeah, I wanted to show that we are at the 88 Fibonacci, okay? So, and we did break, okay? We don't seem to be able to hold the 60, the 88, excuse me, which is very important, guys. And I'm gonna cut the noise here, okay? Because there's way too much noise. That's not how you make money. Okay, so right here, okay guys, when you break the 88% Fibonacci, guys, okay, this is something I learned from one of my favorite mentors that really helped me when it comes to the technical side, and he's a huge Fibonacci guy. Okay, we go to the 113, guys. Okay, so that's $63 on Disney. Okay, but we could also snap back. Okay, I bought a little bit here because of the cone of distribution when the third standard deviation. This is long term, this is not a trade. Okay, I nibbled. I will be nibbling on more. This is long term, but we do have worst case scenario. We go to 62, and that is a buying opportunity of the decade with Disney. I'm telling you guys, you're buying at the same level than 2014, guys. Okay, they now have Disney Plus. They have Hulu. They have a bunch of, you know what I'm saying. They went woke. They're paying the price. A lot of people are gonna get fired in the next year in a management, right? It's cool, right? It's a corporation. They're gonna get back on track. I don't have a problem with that. To me, this is a buying opportunity. Okay, don't be scared. Well, I mean, if you want to be scared, you can be scared. I'm not gonna do that. I'm gonna be buying and using my system of probabilities. Okay, so all right, so that's my first pick, and the third one, which is my favorite, it's 10 times better than this one. 3M, guys. This is a buying opportunity, guys. 3M. Okay, this stock, guys. Okay, is yielding 6% dividend. Okay, I shit you not. This is a high quality blue chip company. It's like a Home Depot, guys. And it crashed. No one's talking about this stock. No one wants to buy it. It's not sexy. It's not tech. So no one wants to buy it. I'm buying. Tomorrow, I hope it goes down a little bit. I am buying tomorrow. Today is Memorial Day. We're closed doing this video. Tomorrow, I will be buying this. Yeah, so look at the probabilities. So we can put the probabilities. These are my picks. It's all based on probabilities, and I just, I like these companies. These are really good long-term investment. It's at the same level. It's also at this support right here. Right. So yeah, this is really, this is where you want to be buying, guys. And amazing buying opportunity. I just want to see the seasonality. I don't think it's really good. This you need to be patient with this trade though. Okay, this is not like a get rich quick. Okay, yeah, it's kind of terrible. Okay, it goes up in October. Interesting. October and December. Okay, interesting. Okay, and you can play with this and look at the probabilities. It's really cool. 20 years. Wow, 20 years of data. Interesting. But yeah, so this is a trade you want to be patient. Okay. So, all right, so my last honorable mention of the past 3 months of a corporation that went woke and is paying the price, and I called it, I said I'm short, it's Nike. Yep, a corporation goes woke, you short the stock, okay, guys? And obviously, I think they went woke at about 125, 126. It's at 1.7, so I don't know exactly how much I still want a little bit down, but that's the beauty of it, guys. This is also going to be a beautiful long-term opportunity. Okay, so it's down 14% since they went broke. So that's, it's all right. It's not that much, I would like it to revisit here, so we're gonna see. Okay, this would be really nice if we could, minimum go here, 87 to the reversal to the mean on the weekly. So this is going to be a bounce zone right here, 87. I'm just going to put a trend just for myself about right here, 80, 98, something like that. And then how I execute, I buy on the daily, guys. Okay. And yeah, interesting. Very interesting. Actually, you know what? On the daily, this is a buying opportunity. All right. So this is really how I like to trade on the daily. I do look at the weekly and monthly, but it's less, it's really the daily, but I do think it has more room to go down. but this is a buying opportunity, guys. It's a great company at the end of the day. Nike, 3M, Disney, they're going nowhere, right? Yeah, that's pretty much it. All right, guys, this was a long video. I apologize. I hope this helped. Let me know in the comments. Let me know what you think about my picks. This is those are things I'm looking at. What are you looking at? You know, I'd love to get some new fresh ideas. And yeah, all right, peace out and have a good one. Stay blessed.